Want to fight? Well, okay, not me, but your property taxes. That's a fight I can actually help you win. Let's talk about how to dispute your taxable value, avoid penalties, and prevent losing your house on the courthouse steps due to non-payment.
Yeah, it's Kacie in the LC. Keys to the dream, come and ride with me. Homes, views, life where you wanna be. Las Cruces, living Kacie in the LC. Kacie in the LC. Kacie in the LC. Yeah. Kacie in the LC. Yeah. Kacie in the LC. Las Cruces.
If you're into avoiding unnecessary drama when it comes to home ownership here in Las Cruces and how things actually work when it comes to real estate, please make sure you hit that subscribe button, like and follow, and there's that little bell at the top. Don't forget that too, because that'll give you notifications every single time I drop a new video. Let's break down how property taxes actually work in New Mexico and how to stay on top of things like a pro. So what are property taxes? Like, a lot of people pay them, but they don't actually know what they are. So property taxes fund local things like roads, like schools, law enforcement. So if you own land, mobile homes, site-built homes, and even some business equipment, you are going to pay property taxes, whether you want to or not. What you actually spend and what you actually pay all depends on these few things: your property's value, the location of your property, and how much each taxing entity, like city, council, school district, needs from you. So the bonds that you vote for anytime there's an election, and if it has to deal with schools or roads or taxing you more, it typically falls on your property taxes, and that's how they get the money to fund those projects. So be very careful of what you say yes to. Here's the formula: your taxable value minus the exemptions times the mill rate equals the taxes due. Now, none of what I just said makes any sense, so let's break it down just a little bit more. Break down, flip it, and reverse it. I don't know if that's the right song. Anyways, so say your home appraised at $100,000. So New Mexico taxes only a third of that. So your taxable value is $33,333. Now, if you take any exemptions, for example, head of household exemptions, which we will get into further down in the video, that's $2,000 off the taxable amount. So your $33,333 property is now $31,333. So multiply that by the mill rate of, let's say, 0.29269, and your annual tax bill comes out to around $917. That's not too bad, unless you forget to pay it, which happens all the time. So when are taxes due? Here is the full timeline. November 1st, tax bills are mailed. November 10th, you have to pay your first half of taxes. Or December 10th, that is when you have become delinquent. April 1st, the second half of your courtesy tax reminder has been mailed. April 10th, that second half of your taxes are actually due. May 10th, the second half becomes delinquent. June 10th, delinquency notices have been mailed to you. So you can't say you didn't know, because you will get a mail letting you know that you did not pay your taxes. So July 1st, unpaid taxes are handed over to the state. And then 2 years after your delinquency date, if they are still delinquent, the state can actually take your property. Well, how they do this is you go to auction on the public courthouse steps, and they auction off your property, even if it is your primary residence. I don't want that to happen to anybody. So what happens if you don't pay? So a missed payment, you have interest. So which sucks, right? Like interest on your property taxes, you might as well just pay them. So missed payment, interest rate kicks in at a 1% per month on the base tax, plus a 1% penalty per month up to 5 months, with a minimum of a $5 late fee. If you let that ride too long, your property becomes eligible for auction and public sale on the courthouse steps. And it's not just mobile homes or land. People have literally lost their primary residence and have had to vacate due to a tax bill that they didn't pay. Some as little as $1,000. You don't want that happening to you. So how do you pay? Great question again. We have a really cool and robust online assessor's website. So you go online, you can pay online, you can pay in person or by mail. When you mail, just make sure that your account number and your phone number are written clearly on the check, and make sure that your check does not bounce, because there is also a fee for that. $25 fee if your check bounces. Plus, your taxes are still due at that point. The treasurer's site has the most up-to-date information for the payments, what you owe, what is due. So you can go on to johnnyanacounty.org/treasurer/pay taxes to figure out what you owe, or you can call the county assessor's office and see if they can pull up your account and let you know if you actually owe something. With all that being said, you can actually protest the amount that you are paying, AKA fighting the tax man. So if you think your assessed value is too high, you are allowed to protest them, and there's two different options of how to do that. Option one, when the notice of value comes out, usually in early April, you can protest that notice of value within 30 days to the county assessor's office. If they agree with your protested value, they will adjust the bill accordingly and recalculate what you owe. Option number two, if the April deadline is missed, you can still pay that balance in full by the last deadline of December 10th. Then you file a claim of refund through the district court by January 10th. If the court rules in your favor, you will get a refund and your value will be adjusted for the future years. So if your protest is still pending and that tax bill is due, you are still responsible to pay for it. They do not care that it is pending. You still need to pay, because you don't want to lose your house while you are pending this negotiation. So you're still required to pay that both in December and again in May, depending on when you are protesting. So keep that in mind. So there are certain exemptions that you can do here in the state of New Mexico, which are super cool. I get people all the time relocating here from other places, and they are asking if we have a homestead exemption, and we do not here in the state of New Mexico. However, we have a head of household exemption, and that is very similar to the homestead exemption. So let me break down what exemptions we have here so you can make sure that you file all the exemptions that you qualify for. All right, so the number one exemption that most people qualify for is the head of household exemption. This reduces your taxable value by $2,000. All you have to do is apply with the assessor's office, and once you apply, you get it and it stays with you while you live in that house. If your taxable value is $100,000, it will reduce the taxable value to $98,000 instead of $100,000. Just know that this does not happen at closing. So if you close on a house, you have to file for it after closing with the county. You cannot have the title company do it. They will not do it. It has to be in your name first, and then you can file for that exemption. You also have to apply for it usually during the notice of value period. They will send you something in the mail, and you just have to file for that exemption during that time frame, which is typically in April. So if you get that notice of value and it's the first time you're living in that home, make sure you read it and make sure you send it off, checking the box head of household to get that exemption. It's a one-time application, and once you do it, it sticks with the house as long as you live in that house. The second exemption, and I think this is the most important to remember and know about, is the veterans exemption. We have so many military personnel here in the Las Cruces area just because we have many bases. We have Holloman Air Force Base, we have the White Sands Missile Range, and we have Fort Bliss just down the road in El Paso. So we get a lot of military personnel either active duty or retiring here in the Las Cruces area. They're a civil contractor after they get out of the military. Veterans can use this, and it is so important to know. So listen up if you are a veteran or active duty. The veteran exemption, they have a couple different benefits, and if you are 100% service disabled veteran, you may qualify for a full exemption of your taxes. That means you pay 0 taxes for your house. I'm not sure where else in the United States has it. I'm sure there's other places, but here in Las Cruces, that is what we have. We hook our veterans up. The 100% disabled ones, we hook y'all up. You will need your certificate of eligibility from the New Mexico Department of Veteran Services, and then take that to the county assessor's office. And as long as it's like submitted during the filing window of April, you will be good to go, and they will put that in your file. So as long as you're living in the house, you will not have to redo it. Every time you move, you will have to refile it. If you are not 100% disabled, but you still are a veteran, you can qualify for a $4,000 exemption, and you can stack it on top of the head of household exemption. So now you get a total of $6,000 reduction from the taxable amount of your house. So again, if your house is taxed at $100,000, you will now be reducing that $6,000, so it will be $94,000 that they are coming up with your taxable amount. It's not crazy significant, but it does make a difference in your overall value that you have to pay every single month, which I will take every little bit that I can get. What's also cool is surviving spouses of a veteran who had died during service or from a service-connected cause can actually qualify for the veterans exemptions as well. You just have to check with the assessor's office to make sure how that qualification works for your circumstances. And then they will guide you through everything you need. Now, retirees. There's a lot of you that come here, that move here, and that are over 65. You need to listen up. We have an exemption for you too. You get an exemption, you get an exemption, you get an exemption. Yeah, okay. So exemption for 65 and up. We have a valuation freeze exemption. So if you are 65 and older or disabled and you earn $35,000 a year in modified gross income, you can apply to freeze the value of your home, meaning your property can continue to grow in value, but the amount that you pay stays locked even if the market goes up. So say those that had a home that locked in their value prior to the craziness of the world of COVID, where everything shot up significantly in value, they could have locked at 100 grand, 200 grand lower than what they were now and continue to pay that value year after year and not have to worry about their taxes going up, which is super awesome. You do need to apply 3 years in a row, and then after that, the freeze effect stays in place permanently as long as you are still living there. So all of this still has to be done within the notice of valuation window in April, but shoot, if you just have to reapply for 3 years in a row just to make it stick, I'm doing the paperwork for sure. So how are property taxes estimated? So if you are moving here, relocating here, or purchasing a house and you want to know how much the property taxes are going to set you back a year, we actually have a calculator on the county assessor's website that you can estimate your taxes. We use it all the time whenever we have clients purchasing a house. So it's super effective and super awesome. But if you're just kind of wondering what the taxes would be, if you did purchase that particular house, we got you covered. So if you go to the county assessor's website, you type in the address, the property address, find the property. On the left side, it'll say estimate taxes. Once you estimate taxes for whatever the list price is, so say if the list price is $300,000, you type in $300,000, you say populate that tax data, and it will tell you that the new estimated tax amount on $300,000 will be $3,100 or whatever it is. Roughly, I know we did that special formula up front, but a very simple rule of thumb, if you don't want to do all of that, it's roughly 1% of the sale amount. Simple, quick rule of thumb. So if it's $300,000, it'll roughly be $3,000 a year. So you can estimate whatever you are purchasing. You can send that data to your lender so they can give you a quote for the right monthly payment, because what they do is take the principal, they take the interest, and they take the taxes, and that is how you come up with the monthly payment of what you will actually be spending. So if the taxes go up, guess what happens to your mortgage? That goes up too. If your insurance goes up, guess what happens to your mortgage? That goes up too. So all of those are directly affected. The only thing that's not is the principal, because that stays the same throughout time, and then just your monthly payment could be affected by the taxes and insurance. So estimating the taxes is a really great way to plan ahead on a house if you really, really like it, just to come up with those numbers, especially if you are very, very payment sensitive whenever purchasing a home, which, let's be honest, the majority of buyers are very payment sensitive when purchasing a home. So as a final reminder, if you own your own home, free and clear, there is no mortgage, there is no escrow payments, it is still your responsibility as the homeowner to make sure those taxes get paid through the county assessor's office. They do not care that you don't have somebody doing it for you. They expect payment, and if you don't get payment, revert back to the beginning of this video. You still will have to pay, or your house gets auctioned off at the county office. So if you need to set a calendar date reminder in your phone, tell a spouse, put a sticky note on a calendar, I don't really care how you need to do it. We will post in the comment section the dates of when everything is due, so you will have it easily available for you, and just put it in your calendar. So if you own your house free and clear, if you purchased a house cash, or you paid your house off, you still owe property taxes because it is no longer coming out of your escrow amount. If you still have a mortgage and you're making those monthly payments, every monthly payment, there is a portion of that monthly payment that comes out to be filed into your escrow account. That escrow account has taxes and it has insurance. Then the mortgage company pays the insurance to your insurance company, and then they pay the taxes when the taxes are due to the county assessor's office. That is how they get paid. That's why you don't have to pay it whenever you have a mortgage on the property, which makes it much, much easier to not have to remember to do it. So that part gets taken care of, which is super awesome. But the lender is the one that's responsible for the payment, but you are responsible still to make sure that payment actually goes through and there are no hiccups along the way, because God forbid it for some reason has some glitch and your payment doesn't get paid. They don't care that it was the mortgage company's responsibility. You will still be required to get it paid, or you can run the risk of penalties, late fees, and showing up on the auction house steps. So make sure you double check, and you can actually just go online, type in your account number, and see what taxes are owed. So if you're not sure, and if you own your house free and clear, if you inherited a property from your parents or a loved one or whatever, make sure, and if you know that they probably own it outright, or if you're actually not sure if they own it outright, if you're not sure if they paid the taxes, you can go back and double check to make sure that the taxes have been paid, or if you owe anything. Also, something that New Mexico does that I'm not quite sure if every state does or not, but we pay our taxes in arrears. So what does that mean? Means that you are paying for time that has already passed. So if you sell your home mid-year, at closing, you will actually credit the buyer for when you lived in the house. So say if we close July 1st, you will be crediting the buyer from April 10th, because that's when taxes are due, to July 1st, because on April 10th, you've already made your payment. So you've paid up until April 10th. So you lived in the house April 10th to July 1st. You will pay prorated taxes back to the buyer during that time frame. And then the buyer will have that money in an escrow account, and they will pay a full lump sum come December or November 10th, they will pay that amount. So that's how it works. If you see it on a settlement statement, like, why am I paying the buyer taxes? Why am I crediting the buyer for my property taxes? That is the reason why, because we pay them in arrears. So when the full tax bill comes due, the new buyer will pay the bill in full. Hope that makes sense. So property taxes are not like the sexiest topic to talk about, but it is so important and so necessary to avoid losing your house, and to know what kind of exemptions you have available, and to know how to fight it if you think that you are being taxed too much. So now is the time. All of us got tax bills in April, or estimated tax bills in April. Now would be the time to fight it like ASAP if you're going to fight the tax bill and say that you are paying too much. It's possible. So if you learned something new today, or you live in a different state and your tax situation works totally different than what we do here in New Mexico, I would love to hear how things work for you, or how you guys do something different, or I would love to know what you learned. So drop it in the comments. I would want to hear your feedback of how y'all do things in different states, or if you learned something different. Thanks for hanging out with me on this not so sexy topic of property taxes and the inner workings of them. I'm Kacie in the LC. We'll see you later.
Yeah, it's Kacie in the LC. Keys to the dream, come and ride with me. Homes, views, life where you wanna be. Las Cruces, living. Kacie in the LC. Kacie in the LC. Kacie in the LC. Yeah. Kacie in the LC. Yeah. Kacie in the LC. Las Cruces. It's where you wanna be.